Welcome to today's Thursday session. We are looking at the topic detaching from the money, the key to trading clarity as well as consistency. The main aim being to help each other trade with emotional clarity and not emotional intensity. The objectives of this is to ensure that you are trading with a clear mind, that is process focus, to execute your plan regardless of outcome, to trade with clarity and not anxiety, that is emotional control, as well as to also start to produce consistent results, which lead to better performance. Why do emotions sabotage trading? You're going to find that there's a problem. Usually, the strategy isn't the main issue. You have a strategy, it works very well. You are losing money, but it is not because of your strategy. You find that emotions are also tied to outcomes, and that often derails success. So, the solution that we are coming with here is to try and help you detach from money to gain clarity, as well as to trade the system instead of trading emotions. Detaching from money, you are going to find that decision quality is more important than profit and loss. So, your profit or loss should not drive decisions. In fact, your quality of decisions should not be as a result of you looking at profits and losses. You need to prioritize the process over the outcome. That is to focus on execution and not results. I know it's a money oriented space. Business wise, we need to make money, but the execution is more important than the results themselves. You also need to see each trade as one in thousands. That is to look at this long term. We always mention you need to have long term goals on what you are looking at, what you are considering, what you are projecting. Long term perspective, when you start to look at the bigger picture, you're going to see that each trade is one in thousands of trades that you then have to take. So, being attached to money emotionally usually then results in you averting losses. That is the fear of losing hard earned capital. And usually, when you get into this, you are going to find that quickly you are going to start closing trades prematurely. You are going to sometimes be too afraid to enter. So, loss aversion, that is you fearing to lose your hard earned capital. The other thing that we get to experience is wealth fixation. Some traders have a desire for quick financial freedom. They think that this is a get rich quick scheme when it is not. There's also ego investment, where you tie yourself with to trading results. For some traders, it's either I win to prove that I'm a good trader or not. And because of that ego, even if they lose, they want to get back in to try and recover the money just to prove themselves, which is also a recipe for disaster. We also have emotional memory, where past results create a decision bias. You have been losing a lot, and now you think you're probably not as good, or you have been winning a lot by buying or selling, and you think because you've done it before and you then have a bias on the outcome of a market, something which we also need to avoid. So these are some of the things that we need to work on to try and get rid of, as they can help us to not be emotionally attached to money itself. What is the cost of emotional attachment? You're finding that sometimes we have revenge traders. This is very common. People who take impulsive trades to recover losses. We've got premature exits, where you cut winners short due to fear itself. Plan abandonment, that is ignoring your strategy for emotional decisions. You are no longer trading your strategy, you are now working with emotions. You've lost a trade and you are trying to recover the losses, or you are cutting winners short from fear because you think that the market is going to turn against you. We also have mental exhaustion, that is inconsistent results that also then lead to burnout. If you are now emotionally detached to the money, you're going to find that in some cases you're going to have mental clarity. That is reduced stress and anxiety during trading, because it's not the money that is important, but the execution of your plan according to your strategy. And whether you have won or lost the trade, as long as you did it according to your strategy, that in itself is fulfilling. You're going to find that you have objective decisions, that is, analysis based trades and not emotional ones. You start to avoid impulse trades or revenge trades because you are only trading when your strategy aligns and shows you that, or green lights an actual entry. Strategy adherence, reliably following your proven system. If you are not attached to money, or if you're now emotionally detached to money, you're going to find that you can follow your strategy better, which is your proven system. And over long term, you are definitely guaranteed to be sustainably profitable over um, quick wins. So there's long-term success if you are no longer detached to the money and you are more inclined to focusing on your plan and your strategy. Principles for money detachment. Number one, we've got proper risk management. That is to say, you need to always risk only what you can emotionally afford to lose. This is very important. I cannot stress this more. You only need to risk what you can emotionally afford to lose at all times. You need to trade a system based trading plan, which has clear rules and not go by feelings. So, whenever you are on the market, you need to make sure that you are following a specific set of rules, which you can actually check against and make sure that what you're doing is in line with the rules that you have set for yourself. Journaling is important. That is to focus on execution quality and not just profit and loss. We have a journal that we use. We've got a journal software. Make sure you're making use of it. We've already shared the link. So can you capitalize on that one? Process goals, that is to measure plan adherence instead of profit. Sometimes it's important to evaluate yourself based on whether you've been able to follow your plan to the T, in as much as profits are necessary. Instead of looking at profits themselves, you would want to then adhere to your plan and measure whether you have followed your plan accordingly. So, some of the essential mindset shifts that we need. The old thinking is I must win this trade. The new thinking should be I must execute my plan. I need money today should turn into I need consistency this month. How much can I make should turn to what is my risk reward. I lost, I failed should turn to I learned and I refined my edge. So some of the mental habits to cultivate, that is pre-market preparation, daily mental centering before trading, to be in tune with the market, to clear your mind and to focus on the market itself. Trade reflection, that is post-trade analysis of decisions and not just outcomes. So instead of just looking at outcomes themselves, whether you won or lost, you also need to look at things like, did you follow your strategy accordingly? Did you trade according to your plan? And journal that as well. And sometimes taking a mental break, that is screen timeouts to reset on focus. As a trader, you do not have to always be glued to the screen. One of the reasons why you even trade is to buy back time. So you need to be flexible enough that sometimes you take mental breaks where you are not on the screen and you're not on the chart. You get to experience something else and clear your mind, and then you can get back to trading itself. I hope this session has been helpful in one way or the other. If you have any questions, feel free to ask them in the chat so that we can assist each other. You can also make use of the group as well to ask some of these questions. We do this every Thursday, so stay tuned for the next one.